Hello and welcome to the Riyal Deal, coming to you from the Al Arabiya English studios. This is your weekly bulletin, bringing you all the latest business news headlines and analysis from Saudi Arabia. Coming up, with Saudi mining under the spotlight at the Futures Mineral Forum in Riyadh, we tell you about a significant discovery of new gold. We'll also be discussing gold prices more broadly. With inflation up slightly in December, we look ahead to what 2026 might have in store for the kingdom's economy. We'll be hearing from JP Morgan's head of global banking on why he thinks Saudi Arabia is such a magnet for global capital. Plus, we'll tell you about the wild truffles worth millions of dollars buried under the desert sands, which are giving the local economy in the region of Qasem a major boost. Straight to our top story. The 5th edition of the Future Minerals Forum has now wrapped up in Riyadh. We're bringing together more than 20,000 participants and some 400 speakers. The Saudi Minister of Industry and Mineral Resources, Banda Al Khurayef, has described it as a major decision-making forum, impacting policies and facilitating investment. Well, the minister added that the kingdom's mining sector is now the fastest growing in the world. Well, reinforcing the importance of mining, the Saudi mining company Maaden has announced a major discovery of new gold resources, totaling more than 7 million ounces across 4 different sites in the kingdom. Well, I'm joined now by Jameel Ahmad, who is the Global Markets Commentator. Thank you very much indeed for joining us, Jameel, and Happy New Year to you, because we haven't seen you this year. But let's start by talking about the Future Minerals Forum, which took place in Riyadh. What are your thoughts, looking at what happened there, and just more broadly about the importance of mining to Saudi Arabia?
Happy New Year to all of you and the esteemed audience as well. Looking at the mining conference, I think it's very important because of the representation that was in Saudi Arabia. We had more than 100 countries represented with more than 400 global company leaders. Essentially, what this does is that it promotes the wider 2030 vision to diversify away from the legacy of oil revenues, but also to put Saudi Arabia at the heart and center of so many different industry conferences and events. And if you look at the macroeconomic or micro data in this perspective, where you have the mining industry, it constitutes somewhere between 2 to 3% of GDP, but that's something that's expected to double, if not triple, as we head into 2030 as part of the investment in the economy. But you really can't put a percentage point on the indirect benefits from having these conferences and these events. For partnerships, what it might do to other aspects of the economy, promoting the appeal and the marketing of Saudi Arabia as, a growing hub, but also a heart of business relationships and potential growth.
Okay, one of the announcements that was made, I think on the eve of the start of that forum, came from Maaden about a massive gold discovery that they'd made. What are your thoughts about gold prices and other global assets as we head in, as we already begin 2026, for the rest of the year, shall we say?
Well, directly, this discovery as well, despite it being an enormous discovery, it doesn't actually directly impact day-to-day price movements of global assets. But what it does do is promote the future appeal of the economy and its potential. Moving back towards price movements, we've started 2026 with more all-time highs for certain global assets that continue the trend of 2025, mainly gold and silver. And this is helped by themes such as some of the world economic uncertainty that's taken place, some of the other developments also that are taking place across interest rate expectations and other themes that are very important to investors. But essentially, this is still a milestone discovery that would directly help the economy over the longer term.
Now, inflation in Saudi Arabia reached about 2.1% in December. That's up very fractionally, I believe, on the previous reading. I mean, what do you make of that? What should we read into it?
It's a modest growth and modest reading increasement of inflation when you look at 1.9% in November on an annualized basis, which was actually its lowest level in 6 months. And then you got the latest reading at 2.1%. Overall, you compare it to what global peers and global inflation levels, it's actually very low readings, and that's a good thing for domestic economy, improving investments into the region, as well as increasing the competitiveness of bank loans and so forth. But overall, it's in line with the expectations. If you look at what the IMF are expecting for inflation over 2025 and even over 2026 and even late 2025, they are expecting for inflation to range somewhere around 2%, and this reading and the previous readings pretty much fall into that narrative. So it seems like all good.
Okay, and just lastly, what are your overall thoughts for the outlook of the Saudi economy in 2026 and how the economy is expected to perform compared to some of its global peers, Jameel?
Well, let's start when it comes to the global peers, because you are going to see outperformance of the region and Saudi Arabia once again, compared to 2025, where it really did surpass expectations. You're looking at a global economy that many think tanks and institutions expect to grow somewhere around the level of 3% in 2026. Whereas Saudi Arabia itself, you've got some of the lowest readings coming out are 4%, and some of the highest readings are somewhere between 4.5 and 4.6%. I think it comes down to investment, a lot of investment in the Saudi economy as we start to head towards the final 5 years of the 2030 plan. And a lot of the, I would say, the seeds that have been planted over previous years, conferences, events, industries, and corporations moving into the region, that's also helping matters. But generally speaking, it's not going to be surprised to see so many optimistic and congratulatory headlines that the region, and again, it is being led by Saudi Arabia, the United Arab Emirates is also helping, is going to outperform its global peers and the global economy, essentially, over the course of this year.
Okay, well, thank you very much indeed for talking us through all of that. Jameel Ahmad, Global Markets Commentator, thank you very much indeed. Let's get a quick check of some other stories we're following for you now. According to the General Authority for Statistics, Saudi Arabia's industrial output accelerated in November, posting its fastest growth in months. Well, driven by stronger manufacturing activity and higher oil output, the industrial production index rose 10.4% year on year. This is seen as an indication of strong momentum in the kingdom's industrial sector as Saudi Arabia pursues economic diversification in line with Vision 2030. Underlining the kingdom's expanding role in world trade, Saudi ports recorded strong growth in 2025. The Saudi Ports Authority, which is called Mawani, says container handling rose more than 10.5% year on year. While Mawani says the gains strengthen supply chains, support trade and food security, and advance the kingdom's ambition to be a global logistics hub. And according to a new report, Saudi Arabia led venture capital activity in the Middle East during the course of 2025, raising more than $1.7 billion. That is an increase of some 145% year on year. Well, the kingdom also topped the region by deal count, clocking up 257 transactions. Well, the report's authors, Magnet, say that this performance reflects rising confidence in the kingdom and its growing role as a long-term hub for global capital. Now, last week we spoke to the Trump Organization's Executive Vice President Eric Trump, and we spoke to Ziad Al-Shar, who is the CEO of the Saudi developer Dar Global. That was about their plans for 2 Trump-branded luxury projects in Riyadh and Jeddah. Well, this week we're going to zoom in more on the Saudi residential property market. Cavendish Maxwell is one of the Middle East's leading property consultants, and they've just released the latest residential market report for the kingdom. Well, amongst the key findings, apartment and villa prices rose sharply last year in Riyadh, and rents for apartments jumped nearly 12% year on year. Well, the report also shows that Jeddah saw steady growth, while the city of Daman, which is on the east coast, has emerged as an investor hotspot, with transactions there up nearly 60% year on year. Well, to tell us more, I'm joined now by Sean Heckford, who is the Director of Built Asset Consulting at Cavendish Maxwell. He joins us now from Riyadh. Thank you very much indeed for joining us, Sean. Let's talk a bit about the residential market performance report, which you've just published, and it covers Q3 of 2025. Just talk us through some of the highlights and what all of it tells us about the overall Saudi real estate landscape.
Yeah, no problem, Tom. Thanks for inviting me onto the show. As you mentioned, our Q3 report. Let's touch on the overall economy first, because that obviously rolls into the residential sector, with the GDP in the country expanding by 4.3% in those first 9 years of 2025. Obviously supported by the non-oil sector that in itself grew by 5.1% year on year. The IMF's expectations or projections for 26 are up to 4%, which is great. That all has a knock-on effect to the residential market. And in Q3, as you've mentioned, there's a distinct city-led divergence, with Riyadh, Jeddah, and Dammam each following different demand and affordability trajectories. So let me touch on Riyadh, the headlines, if you like, from that report. Quarterly activity, 13,000 transactions. Which was up around about 19% quarter on quarter, despite a year-on-year decline, which was predominantly driven by affordability challenges. Jeddah itself, as you mentioned, stabilised. Transactions rising 10% quarter on quarter to about 5,500 in the quarter. Transactions that reflecting moderate price growth and eased affordability, to be fair. And Dammam's storming ahead. Dammam emerged as a standout performer, recording nearly 60% year-on-year growth, its strongest sales levels in years, and I don't see any reason why that's going to stop, to be honest. So in summary, that's what we highlighted in that Q3 report. Things are on the up.
It suddenly sounds like it. And I'm just wondering, in terms of residential property values and the outlook, where do you see things heading?
At the moment, the market is, I would say, 100% Saudi domestic buyers. That's going to change because of the new rules that have been brought in with foreign ownership, which, although they've been brought in, haven't fully opened up yet. But there is going to be a change in that split certainly over the next 5 years. There's going to be significant demand from expats and regional investors, particularly once these regulations take hold and more people are aware of them and are taking advantage of them. Over the next 5 years, there's going to be an evolution, I think, towards mixed domestic and foreign buyer composition. The domestic market's always going to stay huge, though. I visited Riyadh cityscape just before the end of last year, and I was dumbfounded, not only at the scale of that cityscape exhibition, it was phenomenal, and I've seen many around the region that were, I thought, good until I saw this one. But what really caught me by surprise was when I was leaving the exhibition halls in the evening, the sheer volumes of Saudis that were coming into the exhibition with their families, because it's not just a head of the family thing, the whole family's getting involved. And when you think that 34% of the 35 million population are under 14 at the moment, that's a huge pipeline of Saudi nationals that are going to need housing going forward. And they're all getting the real estate bug, for want of a better thing, through those things. So, I think whilst there is a lot of emphasis on the foreign ownership laws and trying to bring foreign money and investors into the country and expats, there's still a huge volume of Saudi nationals that are going to be looking for quality residential housing as we go forward.
Sean, one of the surprises looking at your report is just how Dammam has seen such a big uptick in interest, and you mentioned it earlier. I mean, what's behind that, do you think?
Well, Dammam is a hotbed of logistics and industrial for Saudi Arabia. So that in itself pulls lots of headcount or lots of people into that region. But also, if you add into that the connectivity with Bahrain, you add into that the connectivity of the new rail that's being planned, more and more people are migrating towards Dammam. And of course, affordability is another thing. It is a lot more affordable to invest or buy property in Dammam. And with these communication links opening up, it's easier to get around the country. It's easier to get to and from Jeddah, or to and from Riyadh. So there are lots of reasons why that's happening. And again, I don't see any reason why that should stop. There's also a lot of development on that side of the country in terms of tourist and hotel type scenarios that are in planning or even being developed. So it's a good news story all around for demand.
Okay. You mentioned affordability, and of course that's a buzzword in the rental real estate market, and there's been a 5-year freeze on Riyadh rentals. I'm just wondering what impact you see that having.
It happened for a reason, because ultimately the numbers or the way the market was going, it needed to be addressed. Rents were just escalating and escalating, and the Saudi government's very good at seeing a problem and addressing it. And they saw this problem and they've addressed it by implementing this 5-year rent cap. Is it going to cause any problems? Well, I don't know. We haven't yet to see how it manifests itself. What it could do is cause landlords to invest less in their properties in terms of operation and maintenance, because they're trying to tighten up on their profit margins. The impact it's going to have on rents for new builds and new properties coming onto the market is yet to be seen. We've got no data on that, and I'm not going to look into a crystal ball and project what could happen there. But I'm sure if things started to go awry, the government would make adjustments and changes, because they're very good at doing that very quickly.
Okay, so overall, I mean, one of the things that I garnered from your report, we've got 57,000 new units projected for this year and next year to be delivered, more than 100,000 in the pipeline for the following 2 years. Is the bottom line here that supply is keeping up with demand, or is demand still running away with itself?
I wouldn't say demand's running away with itself now. There is more supply coming on the market. Across the 3 major cities is actually projected to 105,000. So the 57,000 that you mentioned is for Riyadh alone. So, there is a lot of housing that's coming on the market. Is 57,000 new properties in Riyadh going to be sufficient to meet demand? To be honest, it depends on how the projects that are ongoing at the moment are progressing, whether Saudi nationals are migrating towards Riyadh to help support those projects. I mean, the growth in Riyadh is projected in line with the 2030 vision to go from 8 million to 10 million. So we've got to absorb in the next 4 years 2 million people here in Riyadh. So is it going to help address the rebalance? Well, yes, it is. There's a good volume. Is it going to address everything that's needed? Again, crystal ball time, and I can't really project that yet. We can't project that.
Okay.
But it's a good start.
Sounds good. Some big names entering the market. We were talking last week to the Trump Organization. Nakheel is also in the fray. How does this change the dynamic of the market? And does it change the sort of demand that we might see in the market?
I think what's happened with the names that you mentioned, and others, to be honest, that are now being reported to come into the country or into the kingdom, again, it's a good news story. The Trump specifically, they're going to be targeting luxury, and luxury in Saudi Arabia is something that's synonymous. We all know that. But actually, there's a lot more housing that's needed. We've discussed that. And some of the other developers that are reported to come in here are bringing a style of development that I believe is needed and wanted by the Saudi nationals and of course by those expats. Gone are the days of Saudi families living in a huge villa with multiple levels of the family living together. I think there will be still an element of that in certain parts of the country, but there is a demand for the more mixed-use development, which has got open space, leisure, retail, sporting facilities, and certainly the younger generation that we were talking about earlier. They're looking for that type of development, and the developers that you mentioned, that's what they're bringing to the country. And we're also looking at a legacy of pretty stark towers, residential towers over the years. That's what we're moving away from that now, and people are looking for a much better, much more luxurious, even at the lower end of the market, a much nicer environment to live in.
Okay, and just lastly, I mean, we've got changing dynamics in the market, as we've discussed, changes to the laws regarding foreign ownership, some tax reforms coming into effect this year. I mean, would you have any sort of parting words of advice for someone who's watching, perhaps a foreign national thinking of investing in the Saudi real estate market?
I spend a lot of time in Riyadh. I drive around Riyadh a lot, and I see what's happening here. It is mind-blowing. I've just spent, when I moved to the Middle East in 2008, I spent a lot of time in Dubai, and I saw that grow. What I'm seeing here in Riyadh is mind-blowing. And if any investors were looking at the Middle East to invest, I think that Saudi would be my first port of call. Now that things have changed, now that laws are being changed, and that the attitude of the government to make adjustments when things don't appear to be working right is phenomenal. Some of the residential developments that are being built are awesome. The leisure facilities such as Qadir, the Six Flags, what's going on down there is mind-blowing. I don't see any reason why anybody would not invest in this country as an external or international investor. And of course, the domestic residents, the nationals themselves have got a great country, they've got a great ethos, they've got a great culture. And I think they're going to build on that.
All right, we really appreciate you taking the time to speak to us. Thank you very much indeed. Sean Heckford, Director of Built Asset Consulting at Cavendish Maxwell. Thank you for your time, sir. Let's get a check of some other stories we're following for you here on Al Arabiya English. The low-cost airline Flynas has announced that it's establishing a new operations base at Abha International Airport in the southwest of Saudi Arabia. This adds to the carrier's existing operations bases in Riyadh, Jeddah, Daman and Medina. When the base begins operations, Flynas will become the first Saudi airline to operate flights from 5 different hubs across the kingdom. Rail travel across Saudi Arabia continued to gain momentum in Q4. The Transport General Authority says trains carried more than 46 million passengers nationwide. Urban rail systems accounted for the bulk of the trips, and freight rail also expanded, shifting more than 4 million tons of goods. And in another reflection of rising tourism activity, Saudi Arabia's hotel sector saw steady gains in Q3, with the average hotel room occupancy rate climbing to just over 49%. That's up nearly 3 percentage points year on year. Meanwhile, the kingdom's tourism workforce surpassed 1 million people in that same period. Now, Saudi Arabia has emerged as a major destination for global investment, and foreign direct investment into the kingdom reached about 25 billion Saudi riyals in Q3. That's a year-on-year increase of around 34.5%. Well, to better understand why Saudi Arabia has become such a magnet for global capital, my colleague Fatima Dawi spoke to the head of global banking at JP Morgan, Filippo Gori. She asked him what's driving this. Here's what he told her.
We have been operating in Saudi for 90 years. We celebrated our 90th anniversary just before the beginning of the FII in November of last year, and it was a fantastic moment to kind of acknowledge how much the Saudi environment, Saudi economy has changed over the last 90 years. And now we have 150 folks in the office here, is our, which will probably go to 200 in the near future. I personally think it's a structural change. There is a variety of reasons for it. Number one, the important infrastructure investments that are going on in the Saudi space are definitely shaping an interest, a global interest in this part of the world that unseen. I also think that there is a global South narrative. And from a global South narrative, I think that the Middle East could be the winner for a variety of different reasons. Ability to attract foreign direct investments, being appealing to the rest of the world, being logistically placed in the right place, geographically placed in the right place, and also the richness in natural resources. So I think it's a structural more than a cyclical change, and we are preparing it, and we are investing in the Middle East because we believe it's structural.
And that was my colleague Fatima Dawi speaking to the head of global banking at JP Morgan. Well, she went on to ask him what he thinks will unlock the next wave of global deal making.
I would say part of it is already unlocked with the ability to do large deals, large transactions. I think electronic cars is the best example of a large deal which we singly underwrote the debit component, and that transaction has important Saudi investors too. So the ability to do large deals, the market has accepted that is doable, and therefore I think that trend will continue. The reopening of the IPO market, I think it's probably one of the other important elements that should take place. Some IPOs happened in 2025, probably it was in a smaller scale than we had originally expected. We believe that 2026 will be a year where the IPO markets could reopen for good, and we could see some large transactions come.
Now we're going to end in the Saudi region of Qasim, where the 5th edition of the Truffle Festival has been held, or found under the desert sands. These prized truffles, some of which are exported to Europe, have spawned a whole cottage industry and in turn given a big boost to the local economy. Well, collectively worth more than $10 million US. These truffles and the interest in them have driven tourism to the area and also boosted local household incomes. And that is all we have time for. Thank you very much indeed for watching The Riyal Deal here on Al Arabiya English. Look forward to seeing you again with more news from Saudi Arabia next week.